We've got the rand a little bit softer today, trading around that 690 marker, but we have seen the dollar regaining a bit of a firmer footing.
Yeah, absolutely, Stephen. We've seen the rand give back a bit of ground against the greenback, but it's actually also given back a bit of ground against some of the other crosses, the euro and the pound. And I think everyone's waiting with bated breath to see what the FOMC minutes deliver later on, because the talk on the town at the moment is still very much about what's going to happen in terms of quantitative easing. Is the Fed going to stimulate the economy by more and by how much? And of course, what does that mean for the dollar and for the global economic recovery? I mean, so far we've seen the dollar coming under pressure every time that QE kind of gains traction. But the one good thing about it as well is that it will hopefully help the world's largest economy from recovering. I think on balance, we still align ourselves with a weak dollar prognosis in the event of more QE. But at this stage, it seems like everyone's just taken a little bit of money off the table, just watching and waiting.
Of course, we did have quite a quiet session yesterday because it was Columbus Day in the United States. So do you think that contributed to the little bit of dollar strength that came through?
Definitely, Stephen. I think that everyone is going to probably be coming back to their desks in earnest today, and of course we had that awful payrolls print on Friday. So I think when reality kind of kicks in and we have those FOMC minutes, perhaps the market can trade more according to kind of the facts than anything else.
How about the rand in the meantime? We had a report on today's business day pointing to China growing its or diversifying its reserves into other emerging market debts, and of course that would probably include South Africa as well. So do you think this is an indication that we could see more money coming into government bonds?
Yeah, I think when it comes to reserve diversification, we've seen a trend in recent years where a lot of central banks have moved out of the dollar and into kind of other G10 currencies. I think a move towards emerging market currencies is probably going to be a very sluggish and gradual process. So it's going to be very difficult to ascertain how much of that would be directed towards the rand. I think it is indicative of the environment that we find ourselves now in, and that is that everyone's very bulled up about emerging markets. Everyone loves the emerging market fundamental story, but of course we all know that this won't last forever, and at some point these developed economies are going to recover, and then maybe emerging markets might not be the best bet. So I think central banks and authorities are mindful of this, and as a result they want to move in small increments, and I don't think we should bet the farm and expect exceptional rand strength as a result of those comments.
We're getting manufacturing data out today, and I see that the consensus is for a 9.5% rise for August from 7.5% in July. What's your expectation there, just given the strength that we have seen in the rand, and also I think we had a number of strikes still continuing into last month?
Yeah, Stephen, I think those two factors, the strong rand and the strikes, are definitely impeding the manufacturing sector, and we should be careful about reading too much into today's manufacturing print, because there are some statistical effects that are going to buoy the number. But I think the underlying trend is a weak one, and we've seen that coming through with the Purchasing Managers Index that dipped below 50. And anecdotal evidence also suggests that the manufacturing sector in South Africa is still under the whip. So I think we even if the number comes out on the upside, I don't think it kind of detracts from the situation that we have, and that is a weak manufacturing sector and still the possibility that we might need more monetary accommodation.